Hey folks, so in this video I just wanted to show you how I go about charting Tesla, and I'm going to do this on TradingView just because I know a lot of people don't have Thinkorswim, which is what I like to use. And if you do want Thinkorswim, you're going to need a TD Ameritrade account. So I know a lot of people don't have that, so that's why I'm doing this on TradingView. So this is not some sort of promo, and I do want to just let you know that TradingView, you can use it for free. You could get 3 free indicators if you're just using the free version, which is, in my opinion, it's plenty. But the one annoying thing is you get these little ads that pop up here. So just watch out for that because you're probably going to see them plenty of times throughout this video. So let's just go ahead and start with Tesla. I'm going to go on the 1-year time frame right there. So if we're going on the 1-year time frame, each candle represents 1 day. So one thing that I do want to talk about is these gaps right here. So if I zoom in, you see a gap right there and a gap right there. So gaps in the chart are essentially areas where you don't really see candles. And the reason why is because this is often related to big events that happen in the pre-market. So this could be something like earnings or maybe a big piece of news. Like maybe, oh, Elon sold like 10 million shares or something. And then you see this massive gap. Or, oh, Tesla reported amazing earnings. And then you see this massive gap to the upside. So this is essentially when there's a lot of pre-market activity and then we don't necessarily come back to these areas. So this is what you call a runaway gap. This is also what you call a runaway gap because these gaps aren't getting filled right away. So essentially what I mean by a gap fill is we come back and we revisit that area. So if this right here is the beginning of the gap, which is right around 146, and that is the end of the gap, which is right around 155-ish, then essentially what a gap fill would be is us going all the way back down to that 146-ish level. So that would be a gap fill. So as of right now, we don't have that. And we also have that gap right there. But this is looking on the daily time frame. If we go on a shorter time frame, you're going to see a lot more gaps. And I always recommend that you go on these shorter time frames because you're going to get a lot more information. So if I zoom out right here, you can see a gap right there. That's a runaway gap. It hasn't been filled. Gap right there. That's a runaway gap. It hasn't been filled. Gap right here. That's also a runaway gap. Hasn't been filled. And a gap right there. That was created today. That hasn't been filled. So there are several gaps to the upside, several gaps to the downside. So right now, price action is kind of tricky. So sometimes, if you're trading Tesla, yeah, it's going to feel like a roller coaster. It always does. But even more so now because you got these downside and you got these upside gaps. So if you want to help with your technical analysis, there are some very helpful things that you can do. You could go ahead and draw a trend line for starters. And I like to just go on the 1-year time frame, 1 day, zoom out a little bit. And notice right here, there is this reversal price action right there where we have this green candle followed by a red candle that essentially slams the previous day's price action. So if I draw my trend line right there and I connect it to the most recent price action right there, you guys can see that there's going to be some areas with false breakouts. False breakouts are pretty typical for Tesla because we have these crazy run-ups. Now you're going to see right here that when we did have that false breakout right there, we dumped very hard. Same with this right here. We had that false breakout right there, dumped very hard. So what else do we got on Tesla? Well, we could also draw a trend line. Maybe this one right here. So if we were thinking that this is a channel that we're in right now, so a channel is essentially just like 2 parallel lines. So right now, it does look like we're in a channel, but are we going to revisit the bottom of this channel? I kind of doubt it because that would be pretty darn low. That would take us very low. So if I were to extend this a little bit out, if we were to basically hit the bottom of this, that's saying, hey, you know what, we're going to hit like 34. I really don't see that happening. So, this probably played its course. So I don't think it's as important. So I'm going to go ahead and delete that. So this is pretty much the main trend line that we want to pay attention to as of now. And if we were to get above this and we were to sustain it, then yeah, I think we could have a pretty sizable rally. So there are some other things that I do want to look at. So we got 3 indicators that we could use. So let's go ahead. Let's get the MACD in there, which is the moving average convergence divergence, and the RSI. So if you guys don't necessarily know what this is, I'll walk you through it real quick, and you guys can do a little bit more research if you've never heard of these things. But they're pretty commonplace. So if you use them together, it's a very strong combo. So if you're looking at Tesla, Tesla regularly goes from oversold to overbought. So under 30 is oversold, 30 and under is oversold, 70 and over is overbought. But when we get closer to 70 and when we get closer to 30, you could consider that pretty much overbought and oversold. So as of right now, we're around 45.59. Make sure you're looking at this on the daily time frame as well. So, when we're looking at this, it's pretty neutral right now. It's at 45.48. But if we're looking at the MACD, we're looking at this blue line crossing over or under the yellow line. So the yellow line is the signal line. So if we're looking at the MACD right now, this blue line is crossing over the yellow line, which is a buy signal. So do note that this is kind of a weak buy signal. It's not just completely sloping upwards. This is just a very, very, subtle crossover. So this could easily undo itself. So you always want to be cautious of that. But as of right now, it is in a buy signal. So now that I showed that to you guys, I'm going to go ahead and get rid of those. And we can also go ahead and add some moving averages as well. So just type in MA. And there's a lot of moving averages that you could look at. So I'm going to do this twice. So I like to pay most attention to the 50. Let's go ahead and make that blue. And I want to look at the 200. And let's make that purple. All right, so now I got the 200-day moving average and the 50-day moving average. And generally, the most important time frame that you want to look at this is on the 1 year, 1 day time frame. So as of right now, you got this 50-day moving average. It is kind of sloping down right there. And you got this 200-day moving average that's also kind of sloping down as well. So yeah, the major resistance right here is going to show up right at 181.14. So you always want to be mindful of that. Now, some other things that you want to be mindful of is that, you want to get this swing bottom and that swing top right there. So you can go ahead and grab a fib retracement. And you could go ahead and plop it right to the bottom and then right to the top. Now, I want to extend this out. So I'm just going to go ahead and go all the way there. All right, so you want to make sure that you're grabbing the relative top and the relative bottom right there. So what do we notice right here? So right here, we can see that we have this 173-ish area that also coincides with this resistance trend line right there. So you can see that this was a pretty good area for bears to be shorting, and they did that. So once we hit this 173-ish level, they shorted this to hell, and now it's at 167.44. So, you want to pay attention to that. Now, where can we fall down to if we want to basically fall from where we are right now? Well, we could pretty much retrace all the way to this 50 fib level, which is 159.58. So as of right now, we could just ping pong between that 159.58 and that 173.03. So, we could just be moving within this range. Now, one other thing that I do want to pay attention to is when we did get down to this 50 fib level, we shortly crossed underneath it. So we went underneath it. We sold off pretty hard right there. Now, in my opinion, this is personally just stop loss hunting. So they're essentially gunning after the bulls to essentially shake them out. Now, the following day, we got a reversal candle. We essentially undid all of that bearish price action right there. So from that was a very bullish thing to see. And then we had a little bit of chop. And then we had this massive pump right there that just got us to the next fib level. So, like I said, we could just chop between these two fib levels. If we were to get above this resistance trend line right there, it's very possible that we could either just gap fill right there and then maybe we crap, or we get to that 50-day moving average right there, right at 181.14. Or if we get above that, we go to the next fib level right at 189.80. So there's a lot of different scenarios. So like I said, we could get that gap fill right there, which you guys can clearly see that gap right there. So that's going to be, let me just zoom in a little bit. So if we are going to get that gap fill, that's going to be right around 179-ish right there, as you guys can see right there. And then if we are going to the next area after that gap fill, then yeah, that 181.14, and then the fib right there. But what happens if we cut underneath that 159.58 for several days? Well, then the next thing that can happen is we go down to that next fib level right at 146.07. And hey, guess what? It happens to coincide with that gap right there. So that is why you want to pay attention to these gaps. That's why you want to pay attention to these fib levels. Now, if we want to be a little bit more shorter term and we do want to trade, well, then I'm going to show you one other thing. We're going to go on the shorter time frame. So I'm just right here on the 1 month. Now, we could go ahead and do several things. We could draw anchored VWAPs. So anchored VWAPs are just like regular VWAPs, except we're just anchoring it to specific areas. Now, I like to anchor this to gaps. So if I'm anchoring it to a gap that is a gap down, I like to anchor it basically to the top of the gap right there. And then also if we're anchoring gap ups, then I want to anchor it to the bottom of that gap right there. So there's several things that we can do. Now, also, I like to anchor it to areas where we essentially hit a bottom and then we had a strong rally. So we hit a bottom, we had a consolidation, and a pretty strong rally right there. So I'm going to anchor one right there as well. Now, note that this anchor right here and that anchor pretty much line up around that same area, right around that 163-ish area. So what that's telling me is if we lose that area right there, then yeah, we're going to come right back down to that fib retracement level right around that 159.50-ish level. So things to watch out for. Now also, you could go ahead and go back. You can also throw a anchor VWAP right there as well. So like I said, if it's a gap up, you want to get the base. Oh, not cooperating with me. There we go. So you guys can see that this anchored VWAP is taking us all the way over to that 179.52 level. Now, anchored VWAPs are dynamic in nature. So as price action is moving, they do slightly move with price action. So if we're going out further, like all the way back to this January 23 area, then yeah, this anchored VWAP isn't going to move as much from slight movements. But if we were to rally from where we are right now, then yeah, this anchored VWAP, it might actually line up with this 50-day moving average. So some important things to watch here. Now we could also go ahead and throw an anchored VWAP right there as well, where we seriously sold off. So there's several different places where you could throw these anchored VWAPs, like I said, but there's several things that you can pay attention to. So let me just go ahead and summarize everything again. So resistance trend line right here, moving averages, purple and blue, gap fills, so gap right there on the daily, and then shorter gaps on the shorter time frame. So right there, anchored VWAPs and fib retracements. So as of right now, I would pay a lot of attention to the fib retracements and the moving averages, as well as that resistance line. But the gaps and the anchored VWAPs are going to give you some ideas of where we might fall to if we start breaking these fib retracement levels. So I hope you guys enjoyed this video and have a good one.